Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Nija and with me Shail Bhatnagar, our markets editor. Well, Indian markets continue to remain volatile. Tug of war continues between bulls and bears. But where are the pockets of opportunities and what should be your strategy? We'll discuss this and much more. But coming to you, Shell, first, very good morning to you and all our viewers. It's a lovely Thursday morning. Feels like a Friday though. But talking about markets, domestic equities bounced back really sharply yesterday after a downward slide for the past 2 days. I think sentiments turned positive following positive global cues and better than expected quarter results. Double century for Nifty, it ended at around 21,453 odd level. And it's Thursday today. We are heading into a long weekend. It's Republic Day tomorrow. So, what should be the strategy according to you, and where do you see Nifty?
A very good morning to you, Tanya, and a very warm welcome back to the screen. We've seen a fairly volatile, painful, and extremely, how should I say, difficult expiry for the month of January. Frankly, it draws to a close. And not only is it Friday tomorrow, so thank God it's Friday, it's also a holiday. So we have a truncated week ahead when it comes to February's expiry taking root on Monday onwards. And also, we are now just 3 sessions away, Tanya, when it comes to the interim budget. So, which is on 1st of Feb, Thursday. So you have Monday, Tuesday, Wednesday to react to it. And therefore, a lot of positioning will be taking place, keeping in mind the budget, although it's interim in nature. Nevertheless, we don't know what kind of a surprise would be sprung up. It could be a pleasant surprise, most probably, and that is something to be kept in mind. But let's come back to the Nifty. So overseas cues are flat. There has been a mixed close in the US markets overseas, and the GIFT Nifty is pointing to a 30-40 point downtick. It being the expiry day-to-day Thursday for the month of January, in which the index has had a terrible time. If you look at how the index has behaved when it comes to the month of January, the Nifty is down to the extent of about 2.5%, and a lot of pain has been witnessed in other indices. The Bank Nifty is down 7.5%, the Fin Nifty is down 6.7%, and a 2.5% cut coming on the Nifty. So thankfully the expiry draws to a close, but what will happen today? So first things first, Tanya, let's look at how the index is structured, which is there in front of you as far as the screen is concerned. So two things are very critical, which is the low of yesterday, and that low is somewhere in the vicinity of 21,160. It was on both the Nifty and the Bank Nifty tested during trade. So the index opened fairly strongly, then went all the way up to 21,450, and then again fell down to 21,220. So to some extent the low of yesterday, which is close to the 35 EMA, the 50 EMA, was tested on the Nifty, and that will remain the most critical level when it comes to how the index functions from next week onwards. Now 2 or 3 negative points I'd like to mention. The foreign fund selling continues unabated. Yesterday's number was to the extent of 6,000 crores. It was matched by an equal number of DII buying, so you can say it was neutralized, but my understanding is that the mild gap up and the mild gain that you saw on HDFC Bank, that seems to be under stress today. So HDFC Bank will be watched. And Tanya, if you look at the overall Nifty position as far as the advanced decline is concerned for the month, it's pretty bad. 22 stocks have gained on the Nifty during the FNO expiry, and 28 have lost. While that doesn't seem to be a dramatically bad picture, but if you look at the granularity of the market, the top loser has been HDFC Bank in the Jan expiry, 15% down, Asian Paints 12% down, Eicher Motors 11% down. So these are the kind of losses that have happened. On the gainer side, Bharti is up 14%, Cipla is up 11%, Tata Consumer up 11%, ONGC up 11%. So it's been balanced, but the index heavyweights are in pain, and there doesn't seem to be any kind of respite as far as the Nifty is concerned. So I would just remain, how should I say, on the sidelines as far as the Nifty is concerned. Two stock earnings from the Nifty will come today, JSW Steel and SBI, and the market will react very, very positively to two sets of earnings within the Nifty, which is Bajaj Auto, which is Tech Mahindra. They've come up with a fantastic set of numbers, and apart from that, DLF, Tata Steel have also come up with a dramatic performance. So cash market is for me today. I just pay attention there, Tanya.
Okay, all attention on cash market. That's the word coming in. Index heavyweights continue to remain in pain, and all eyes will be on the quarterly results as well. But talking about Bank Nifty also, Shell, that index not only successfully defended 200-day EMA of 44,565 odd level, but also the crucial support of 44,500 as well. The index recovered around 592 points from day's lows yesterday and closed at around 45,082 odd level. However, stocks like ICICI Bank and Axis Bank, they were among the top losers if you talk about yesterday's trading session. But let's understand from you now that what are you looking on Nifty Bank today, and what are the fresh support and resistance levels?
Okay. So Tanya, the Nifty Bank is right there in front of you when it comes to the daily chart, and you can actually see the pain there. It's exactly at 200 DMA, and that was the reason why it bounced back yesterday. Now, whether that was because of the Nifty Bank's presence at 200 DMA or the slight uptick that you've seen in HDFC Bank remains to be debated, and the result to be found out. But there is obvious pain. If you look at how the market reacted to Axis Bank's stunning earnings, it was almost heartbreaking. The Axis Bank was down 4% yesterday, closed down about 2.5%. And if you look at how ICICI Bank has done, which you've already pointed out, there are pain points everywhere. So the monthly picture is pretty bad for the Nifty Bank, and it's probably and definitely only because of ICICI. You would be surprised to know, out of the 12 stocks that make up the Nifty Bank, in the month of January, only one is up, which is PNB, 6% higher. But the likes of HDFC Bank down 15%, ICICI Bank also in the pain, Axis Bank down 5.3%, and that is how it is. Axis Bank down about 1.2%. Earnings and everything are pretty good, but it's, I think, the FPI related selling pressure that's doing the index in. Tanya.
Okay, absolutely. So that was Bank Nifty for you. But let's talk about the future and option space as well, Shell. Lots happening there as well. So what are you looking at in the FNO space today?
Sakshi, Tanya, it's a host of stocks that are doing pretty well. I would focus definitely on the pharma space. It's doing pretty well. Sun Pharma and Cipla in terms of rollovers are also looking stronger. The other thing that's interesting is Bajaj Auto, TVS Motors, DLF, and Tech Mahindra. Very, very strong earnings coming in. I'd be looking on that side, and because it's the monthly expiry, I just pay attention to a lot of cash stocks. There are 11 FNO stocks that will be declaring numbers today, plus 2 Nifty companies. So it's going to be a very, very heavy earnings day, and all attention would be on the quarterly numbers. Tanya.
Okay, all eyes are on quarterly results, as Shell rightly pointed out. But let's talk about global markets. So if we look at the global markets, Wall Street, the S&P 500 climbed to its 4th straight record high yesterday, and Netflix also surged following a blowout quarterly results. However, Tesla earnings disappointed, and also a strong report from ASML fueled gains in chip makers. So S&P 500 was up around 0.08%. Nasdaq also gained around 0.36%, and Dow Jones, that was down around 0.26 at 37,806 odd levels. If we talk about oil prices climbed around 1% to a 4-week high yesterday on a bigger than expected US crude storage withdrawal, a drop in US crude output, Chinese economic stimulus, geopolitical tensions, and a weaker US dollar. And as Shell rightly pointed out in the beginning of our show, FIIs, they continue to sell, and they maintain their selling pressure. They sold shares worth around 6,934 odd crore rupees. So, Share, coming to you now, what is essential to track from all these overseas cues?
Tanya, I would pay attention to all the Nasdaq components, and the fact that the Nasdaq there is doing phenomenally well on the back of companies like Microsoft. Microsoft became the second company after Apple to claim $3 trillion as its market cap. It shut at $402 yesterday, again a record high. The likes of Meta, the likes of Google, the likes of Amazon, all of the 7 top FANG companies, as they are called, are doing pretty well, and that's added a lot of enthusiasm in the domestic IT space. You've seen how Tech Mahindra's earnings have come. That will react positively. Infosys, TCS, in fact, were the 2 stocks apart from Reliance that helped the Nifty yesterday. So my focus would be on domestic tech, the likes of Coforge, the likes of Mastech, the likes of L&T Mindtree, as also Frontline, TCS, and Infosys. All of them are doing well, and there is of course a very well known ETF in India called Mafang. It holds about 11 top Nasdaq companies, the likes of Facebook, Google, Microsoft, Nvidia, among them, and I'll be looking at that. It's priced at 75 rupees. I am sure there's going to be a nice bounce on that one too, Tanya.
Okay, absolutely, Shell, and Mr. Chokalingam, he will join us in a short while. But Shell, discussing some of the private banking names, because HDFC Bank is a standalone case, one understands that. But for a sector which was supposed to make a comeback, the first flush of numbers has not been encouraging as far as the scenario is concerned. But the market is also punishing inline numbers like Axis and Indusing. So what should be the strategy when it comes to these banking names?
So, Tanya, the color of money is always green, whether you make it in private sector banks on the short side or on the long side in a lot of cash stocks like the railway space, the private bank, the public banking space. I just mentioned some time ago that the only gainer in the bank Nifty on a monthly basis was Punjab National Banks. See, my understanding is that the problem is slightly larger when it comes to the private sector space led by HDFC Bank, Axis, as well as ICICI Bank. Of course, HDFC Bank is going through some merger pains, and therefore you have seen this kind of a negative reaction. Their earnings were not bad. Neither were the earnings of ICICI and Axis Bank bad. What is happening is this overhang of ultimate recognition of who the buyer is within the FPI basket, which is the foreign institutional basket. These are the norms that come into effect from 1st of Feb, and that's causing the pain. In January, in February, foreign institutionals invested 55,000 crores in domestic equities. It had a very salubrious impact on the Nifty. But in January, the sales over the last 6-7 trading sessions amount to 36,000 crores. And because private sector banks were the top picks for them, that is where the selling is concentrated. So earnings or no earnings, सामने से supply आनी है, और अगर ऐसा है तो then obviously if there is sustained selling pressure, then there is nothing can be done, and therefore you'll see a constant erosion in price. That's happening in ICICI, that's happening in HDFC Bank, that's happening in Axis Bank. It's right there in front of your eyes. Of course, domestic institutions are providing some kind of support, but जब सामने बिकवाली है तो the other guys also holds back, no, क्योंकि rate सस्ता आपको मिलेगा एक हफ्ते बाद. So that's the problem. I think front line and second line and third line PSU banks offer a far better upside in terms of a secular up move rather than trying to buy the dip in private sector bank. जब selling खत्म हो जाएगी तब देख लेंगे. Simple.
Okay, absolutely. जब selling खत्म हो जाएंगी तब देख लेंगे. But talking about some of these railway stocks as well, Shell, you remember we used to talk about these, छोटा packet बड़ा धमाkas and all. And these railway stocks, everyone thought that they will move at the bullet train speed. Now I think they are moving at aviation speed. Some of these names like IRFC, RVNL, oh my god, look at the move. I mean, the rally is just unstoppable.
Yes, Tanya, and I always mentally thank you whenever I refer to Chota Packet Bada Dhamaka on air. This is a patent that belongs to you, and we've decided on the price every time it's used on air. You'll be getting an eclairs chocolate from Nestle. So that's done and dusted. No worries there. You don't have to wait. You have a credit balance at my end, and it will be sort of delivered once we meet in person. But yes, no denying that. And Tanya, over the last 5-7 sessions, we had actually stopped taking a technical view on those stocks because the likes of IRFC, the likes of RVNL, IRCON, especially in the railway pack, these stocks had accelerated and jumped in a manner in which short-term technical charts were overstretched. They showed a lot of valuation discomfort, and therefore you had this terrible correction on Tuesday. But surprise, they started lower on Wednesday morning. All those weak hands that were there, they cut the trades, and then all of them have closed back up sharply. You see this percentage rise in IRCON over 1 week. It also includes the 11% fall in on Tuesday. So like I said, there's no, I mean, it's our job to point to cautious and safe trade, but the speculative nature of the market is so high, there is so much of liquidity coming in that nobody really cares, Tanya. So they are now moving up upwards. Buy and hold would be far better than trade in these situations.
Okay, absolutely. But Shail, all eyes will be on the interim budget as well. What are your expectations from budget this time around?
Tanya, it being the year for general elections, one thing is very clear. It's going to be an interim budget. But my understanding is that the government will do nothing at all to upset this momentum, this rally that is there in the budget. So you will have positives coming in, given the given the, how should I say, the handicaps that Finance Minister Srimati Nirmala Sitharaman faces in the budget not being a policy budget in the election year. So given that in mind, it will be a staged document, but it will not sort of do anything out of the ordinary that might impact the fabulous sentiment on the Lal Street. At least that is the hope. I don't see any taxes being raised, if that's what you're talking about.
Okay, absolutely, Shail. And I think now our market guest, Mr. G. Chokalingam, who is the founder and MD of Economics Research, he's with us now. Mr. Chokalingam, very good morning, and always good to have you on BTTV. We were discussing our budget expectations and the markets going forward. So what is your outlook? We all eyes will be on interim budget, and markets have been volatile. If you talk about the month of January, it was a roller coaster ride for the investors. But what are your expectations, and if you could also share your top picks going forward?
Yeah, certainly. As far as budget is concerned, I agree with Mr. Bhatnagar. There's no expectation at all. For a couple of reasons. Last election also, the same party has proved that it is better to wait for the mandate. And secondly, The recent state elections also give a lot of confidence on continuation of the political stability. The ruling party is quite confident that they will come back to power. So therefore, there is no need for announcing any big schemes in this budget. So second, as far as the market is concerned, I remain very optimistic on the market, medium to long term, but short term, I continue to remain very nervous on small caps. As I mentioned earlier also, the valuation, absolute valuation, as well as relative valuation as compared to Sensex and Nifty, there is no comfort at all. And second, there are many small cap stocks with a weak management, weak balance sheet, or weak business model. They have gone up 5 to 10 times, and therefore, the liquidity is a big issue. When any fear comes and selling happens, so the small cap, can repeat what we saw day for yesterday. And also the margin money is growing, and it has grown multifold in the last 3 years. Margin money by the brokers to the retail investors, that is also emerging as a threat. So these are the my views. As far as individual stocks are concerned, I would recommend Taj GVK Hotel. I'm extremely bullish on hotel industry, and Taj GVK is the cheapest hotel stock, and also Indian Hotel has about 25% stake. I expect a lot of consolidation because Indian Hotel, Reliance started acquiring some hotels, and ITC is demerging hotel business. So 2024 calendar year, I expect a lot of activities in the hotel industry, and within that industry, I like most Taj GVK. And second is Indoco Remedies. It has come out with quite poor result, but partly that is because of exceptional income, exceptional expenses rather. So, but if you look at SOTP in terms of valuing the domestic branded formulation, it is very cheap. And these are the two stocks in the small cap space I would strongly recommend.
Okay, let's look at Taj GVK, and it's absolutely right as Mr. Chokalingam mentions that the industry has been doing fantastically well. In fact, if you look at the earnings of Chalet Hotels today, it's one of the outperformers from this space, and all these stocks, Indian Hotels, Royal Orchid Hotels, East India Hotels, Banaras Hotels, all of them are at a record high. There is no reason for Taj GVK to be where it is, 258 as of yesterday's closing, and the all-time high here is somewhere in the vicinity of 334 rupees as far as the stock is concerned. A very warm welcome and good morning to you, Mr. Chokalingam. It's always such a pleasure to listen to your voice and to your views. You've of course mentioned the discomfort that you have in terms of the Nifty, Bank Nifty valuations, which is perfect, and that discomfort has been intensely felt in the market. How do you look at IT stocks? How do you look at pharma stocks? These are of course defensive plays. Would you have any picks from the mid cap or the large cap space in pharma as also IT?
Yeah. IT, as far as IT large caps are concerned, I have been maintaining my stand that the wealth creation story is over. And two, if you look at the export growth, it is in a poor single digit, and that is there for the last 2-3 years. And very interestingly, if you look at a company like Infosys, even in rupee term year on year, there is a dip in the revenue, which is normally is not the case, because even if dollar term it grows only 2-3%, most of the IT large companies maintain double-digit revenue growth thanks to depreciation of rupee. So, despite a slight weakening of the rupee, the companies have failed to post a strong double-digit growth in revenue, even in rupee term. So, these are the indicators that what's going to happen. And so, still, if one is holding some of the large cap, they can continue to hold because, as I said, I am nervous on small and mid cap. So, therefore, these large caps can act as a defensive, but don't expect much return. Secondly, on pharma also, yes, one can continue to hold larger names, but they are already played out. I mean, if you look at the P valuation, for current year, anywhere from 30 to 45, but still they can act as a defensive. Among all pharma names, apart from Indoco, we also recommended Syngene International. I believe that Biocon, which has increased the balance sheet to more than 50,000 crore, would be in a difficult position to service the debt. So they may keep selling Syngene. That would be the opportunity to accumulate for retail investors. It's a solid growth stock, and it is basically catering to R&D service requirements of the global players, and that is where depreciation of the rupee also can help the company. Strong balance sheet, a lot of cash on the books. So I would prefer such a consistently growing pharmaceutical company to other listed players. So these are the two picks from pharma. But certainly one can continue to hold on large caps, both IT and pharma, purely from defensive point of view.
Okay, absolutely got that, Mr. Chokalingam. But let's talk about some of these auto names. I think these stocks will be in focus because of the numbers. And let's talk about Bajaj Auto and TVS Motors. Bajaj Auto, 37% uptick there in the profit. And it's, of course, driven by robust sales of its two-wheelers, price hikes, and higher realizations. For TVS Motors also, profit is up by 68% and record high margins as far as this company is concerned. So coming to you for these stocks and any picks that you would like to share from the auto space.
So one can, buy Maruti. In two-wheeler, one can hold on to TVS Motor. But on any further rise, I would give sales on Bajaj Auto, because on export front, two-wheeler is still struggling. Whereas TVS Motor has made significant progress in electric vehicle, and also the results are far superior to many other two-wheeler companies. So therefore one can hold TVS Motor, and one can buy Maruti. I am pretty confident that right now for Maruti the problem is the traditional small cars are showing deceleration in their sales. And however, SUVs sales are growing in a strong double digit, and the share of SUVs in the total sales for Maruti is rising. So which means at some point in time, the small car deceleration will not have a massive impact on overall sales in terms of negative growth. So that situation can arise within 2 to 4 quarters. Therefore, one can buy Maruti.
Right. Tanya, the pre-open rates are with us, and it's the monthly expiry of Thursday. The Nifty is not showing any signs of good health. It's opened 130 points lower. My biggest fear is that is because of HDFC Bank. Let's look at what HDFC Bank is doing. Okay, it's down 2.2%, 1425 in early trades. TCS is down 2%, that's a surprise, 3766. Infosys is down 3%. 1625. What is Reliance doing? Okay, Reliance is marginally higher, 0.3%, 2696. How about the other two private sector banks? ICICI down 2.4, Axis down about 1%. So it's going to be a very, very painful day for Bank Nifty. Let's see how this settles. The Nifty is now sensibly just 100 points lower. The money is moving into defense. Into defensive counters. Hindustan Unilever 1% higher, 2468. L&T 0.2% higher. Tata Motors 0.7% higher. We let this settle. Still 113 points lower on the Nifty, 21,337. Let's look at the F&O space as of now. What are the top gainers and the top losers? Okay, interesting. Bharat Forge 2.3% higher, 1244. TVS Motors, earnings boy, market appreciating the numbers, 3.7% higher, 2075. Birlasoft, earnings boy, 860, 4.5% higher. Bajaj Auto, earnings boy, 7,500, 4% higher. So Birlasoft, Bajaj Auto are at fresh record highs, as also a strong show by DLF, 776, 3.9% higher. They had also come out with earnings. Tata Steel 1.7% higher, 137. IOC earnings 2.3% higher, 146.80. So good earnings are being appreciated by the market when it comes to the large cap space. What is in pain? Laurus Labs, very bad earnings, a downgrade coming in. The counter is now 10% lower, 360.85. Tech Mahindra, disappointment, 2.5% lower, 1372. We'll shift focus to NSE 500, Tanya's favorite, Chota packet, Bada Dhamaka. Let us see where that Dhamaka is happening. So far, okay, Mazgaon Dock, 3% higher, 2400. We have Chalet Hotels, 1.4% higher, 750, 790. Let's look at the PSU space. What is clicking? Okay, after a 20% rise, Tanya, yesterday on IFCI, the counter is trying to open 8% higher. 5% higher on IRIDA, 170 for you. IOC, RF, IRFC, ITDC, Coal India between 1.2 1.3%. So ladies and gentlemen, इस सब का निष्कर्ष ये है, blue chips are in pain, cash is rejoicing the rally, the Nifty is still 46 points down, 21,407. Tanya, what are you watching?
Absolutely, Shail, you said it, and I want to see what CEAT is doing, because this company has registered a more than 5-fold increase in its net profit at 181 odd crore rupees for the third quarter, and it is backed by strong operating numbers. The revenue from operations also, that is up around 8.6%. Coming to you, Mr. Chokalingam, for a quick view on CEAT, the tire maker.
Yeah, it's a good results, and robust sales in the automobile sector is reflecting. Apart from that, even the moderation in the crude oil, if if you look at the crude oil, it is down almost 19% within 4 months. That is also positive for tire companies because they use synthetic rubber. The natural rubber price also more or less remain stagnant. So that also benefited the tire company. But let us not forget that ultimately the tire is like a commodity business, and it's huge volatility over the years. Raw material prices are highly cyclical. So therefore, I would say that if tire stocks go up in this rally another 5-10%, one should use that opportunity to book profits.
Okay, let's look at some more prices, Tanya. I think it's going to be a railway day and a defense day. We've already discussed Mazgaon Dock. We have BEML opening 0.7% higher, 3182. BEL, BDL half percent higher. Hindustan Aeronautics mildly in the green. Cochin Shipyard 1% higher. These are the stocks in the green. Mr. Chokalingam, would you have a view on shipbuilders? Anything that you find sort of affordable in the Cochin Shipyard, Garden Reach Shipyard, and Bharat Dynamics space? Are they in ranges that you would prefer to buy, or do we stay away from them?
No, I would stay away. Because like if you take a stock like Cochin Shipyard, I used to recommend before all these corporate actions around the 450-500 level. Now I don't have heart to buy these kind of stocks. So let me tell you that PSUs are highly cyclical, small cap also cyclical. So both the convergence, it's an opportunity as well as a threat. So one should be very cautious. I mean, the valuation comfort is not there in most of these PSU stocks.
And it's a fair point. If you are not liking the valuations, there's no point extending positions there or even getting into fresh ones. Tanya, what have you observed?
I think, Shail, let's discuss steel stocks also with Mr. Chokalingam, because they were on a roll yesterday after the Chinese central bank governor announced plans to cut the bank reserve requirement ratio to provide liquidity for the ailing economy. So shares of companies like Tata Steel, Hindalco, NMDC, Steel Authority of India, they were up around 3 to 5%. Coming to you, Mr. Chokalingam, how do you look at this development, and any picks that you would like to share from the steel space, metal space?
No, I would avoid the metal space. I completely agree. I also looked at these Chinese initiatives. The governor has announced cutting down the reserve ratio by 50 bps, highest in the last 2 years. There are a lot of taking measures. But let us not forget the fact that the growth in China is expected to slow down significantly in the current calendar year, despite all these initiatives. and the property sector is still under sort of crisis. So I would rather prefer sectors like automobiles, banking, and because though the stock market is punishing the banking stock in the last few weeks, the fact is that the banking sector credit growth is at a strong double digit, and automobile is continuously posting a solid growth. So these are the two sectors one can focus, and then one can hold on to pharma. So rather than holding on to steel, I firmly believe deflationary conditions would set in China that would slightly spread to other economies. They import more than $2 trillion worth of goods from rest of the world. So we can't write off the problems of Chinese deflationary signs, and that will impact most the metals. So therefore, I would continue to be a little cautious on the metal space.
Okay. Tanya, I think we'll pay attention to the Nifty again. It's now in the green, so it's going to be a mildly positive start. In any case, no fireworks are expected on the index today, it being the monthly expiry, so mostly we've seen it flat unless there's a heavy short covering on HDFC Bank, which now is at a sensible price, 1452, down just 3 rupees. ICICI Bank is now flattened out, 998 for you. Axis Bank has also flattened out, 1058. So the dip that was there in pre-open trade is now flattened out, which is a very, very good sign. What is moving? Okay, Hindustan Unilever 0.5% higher, Tata Motors 0.4% higher, you have Kotak in the green and SBI in the green. So it's going to be an iffy kind of a day on the index. Let's look at the rail theme. What are the stocks in the railway space that are moving? Okay, RailTel 2.5% higher, 407. IRFC 1.6% higher, 174. Nothing else to talk about. How about the thematic group? What's moving here? SW Solar 2.9% higher, 564. We have IOC earnings boy. So it's going to be a news-led day. Anything that's moving on the green side will probably because of a strong earnings show. Tanya, what are you watching?
I think, Shail, I want to discuss Tata Tech with Mr. Chokalingam because we have the numbers today and solid subscription and I mean stellar debut on the Lal Street as far as Tata Tech is concerned. So Mr. Chokalingam, coming to you, what are your thoughts on the companies that hit the public markets last year? I mean, there were a number of companies, stellar debuts. So any interesting recent listings that are on your radar?
Well, certainly one can monitor the Tata Technology. In fact, of course, everybody said subscribe. We also said subscribe, but we closed our coverage on the listing day at around 1400. But it's a great company, no doubt about it. It's a great company, but if you ask me whether the valuations are great, I would doubt. So what I would suggest is that keep it in the radar, have it as a basket of your universe, and wait for the results. By any chance, the stock corrects minimum 10%, then one should start buying it for medium to long term because the growth story would continue. So why I am giving this suggestion is that if you look at 1 year forward PE, which is still substantially higher than around 55-60, so therefore 5 to 10% correction would give a lot of comfort. But it's a long term, a great story, evolving story.
Okay. Tanya, how about looking at some other stocks in the pre-open trade? We are waiting for Mr. Rajesh Palvia to join us. I'd like to look at the most active counters with a green tick. Okay, Bajaj Auto. Now this is interesting. 2% higher, 73.40, 73.60. Needless to say, it's a record high. Tech Mahindra is down. That's surprising. Their earnings were pretty normal. 1348, 4.2% lower, and of course there is strong momentum on the downside. Laurus Labs 10% lower, 360.85. Remember, the earnings were terrible and there have been a series of downgrades when it comes to brokerages on Laurus Labs. I want to see what Z is doing, and Z is flat 167. Remember, it had undergone a series of painful moves over the last 2 or 3 sessions. What is in the green? IRFC, second most active counter, 1.7% higher. Mazgaon 4% higher, 2119. NHPC HFCL in the green. Birla Soft RECL in the green, about 1.5% higher. And of course, the erstwhile favorites of traders are also doing pretty good. BHEL 0.5% higher, 211. To you, Mr. Chokulingam, how about BHEL? Do you have some comfort there?
No, sorry, I don't have, but still if you look at receivable inventory, it's quite high and valuation also improved. So I would wait for some meltdown in the small cap before getting into these kind of PSU stocks.
Okay, Rajesh Palvia now joins us, and we'll take a very quick view on the 2 stocks that he has before stocks start ticking for the opening trade. Rajesh, good morning. Your 2 top picks for today.
So I think I'll go with the PSU stocks, and BHEL is looking promising. The kind of momentum which we have seen in last couple of weeks, I believe that BHEL may continue furthermore upside. So one can look to buy BHEL future in February series, which was almost close at around 210. So we are expecting target of 225 to 230 in positional basis. Keep your stop loss at 203. Another stock that is from oil and gas sector, that is GAIL. GAIL is also looking promising. Stock is holding above 160 mark. So again, one can look to buy GAIL also, Gas Authority, for upside target of 174 to 176. Keep your stop loss at Fab Future around 162.
Okay, with these 2 rhyming stocks in mind, BHEL and GAIL, let's look at how the markets have opened. It's a flat opening in line with what the GIFT Nifty suggested. 50 points lower, 21,400 on the Nifty. The Bank Nifty is 125 points lower, 44,935. Sharp downtick on IT. Now that's unexpected. Almost 300 points lower, 36,786, and a flat opening on the NSE 500. We'll shift focus to index heavyweights immediately, and let us see what they have in mind. Okay, one good thing is that most of them are in the green. Let's look at HDFC Bank, 0.5% lower, 1450. ICICI Bank flat, 997. Axis Bank flat, 1057. How about Infosys, 0.4% lower, 1669. TCS is flat, 3836. How about Reliance? Okay, again flat, 2684. It's the the FNO expiry today, so the index is most likely to remain in a very tight 50-100 point trading range. Okay, let's shift focus to FNO immediately and look at earnings, boys. I want to see what Bajaj Auto is doing, and let's look at Bajaj Auto. It's the top gainer on the Nifty, 1.4% higher, 7,315. Hero Motors is 1% higher, 4468. Let's go to FNO and see what's clicking on the green side. Let's look at the top gainers on FNO. DLF, blowout earnings, 2.5% higher, rewarded by the market. The counter is almost at a 10-year high, 766.95 for you. BHEL taking it away, Rajesh Palvia's first pick, 1.8% higher, 213.65. Piramal Enterprises, 882, 1.7% higher. You have the likes of Lal Patlab, IRCTC, PVR Inox, all up between 1.6 and 1.2%. We'll quickly move to the NSE 500 space, look at top gainers, and then get Mr. Palvia into the conversation. Runaway trade on Mazgaon Dock, 2436, 4.7% higher. SW Solar, this is a power sector play, 4.3% higher, 572. Chalet Hotel, strong earnings, 4% higher, 778. A very quick view coming in from Rajesh Palvia. Rajesh, what looks good to you in opening trades? And then Tanya, over to you.
I think one can continue with the automobile stocks. Bajaj Auto and Hero Motor, these two stocks are still holding the ground, and we believe that these two stocks can continue furthermore upside. So I think Bajaj Auto is the stock where one can look to buy after this opening. We believe that this momentum can extend, and we can see a target towards 73.50, 7400 in the continuation of this up move. So one can keep a stop loss of 70 to 40 to buy Bajaj Auto. And the other stock that we like at this moment, that is Motherson, Samvardhana Motherson, that is trading at around 110, 111 level. So this stock is looking very stable in this kind of volatile market, and we believe that towards this expiry, we can see further more traction towards 115 to 118. So Samvardhana Motherson can be a buy with stop loss of 108.
Okay, very good morning, Mr. Palvia. I actually want to discuss Coal India with you. It is the top gainer from today's trading session, trading at 387 odd level, 1.2% uptick there, and it's up around 70% in the past 12 months. But coming to you for a quick technical check on Coal India.
So very strong setup across all time frame. Stock is enjoying its upward momentum since last couple of months. And looking at the overall structure, we believe that now stock is poised for giving breakout of its previous swing high, which was in year 2015. So I think one should look to buy this stock on a positional basis, and we believe that this traction can continue towards 420, 440 kind of zone, and we believe that stock may regain to its all-time high trajectory in a couple of months. So I think yes, one should remain invested in this stock even in the decline. Also, one should try to add this stock. The stop loss to hold the position is at around 360. Until the stock not breaks below 360 on a weekly closing basis, one should remain on the buying side of trade. Possibly in the trading perspective, 405 to 410 is the target where we can see in the near term basis.
Okay,
Okay,
absolutely
let's
got
look at
that.
the broader markets, Tanya. We
Yeah,
have
sure.
a flat opening on the Nifty. Let's look at how the other indices are performing. Metals, I'm sure, is doing pretty well. We track 19 indices for you. 8 are in the red and 8 are in the green. So it's almost an even Stevens. The PSU banking index is 1% higher, 59.76. The realty index led by DLF is 1% higher, 827. I want to see what metals is doing. Flat, 77.26 on the Nifty index. Small cap index is up 0.3% higher. Remember, this is the speculative element of the market. How about the Nifty 500? Flat, 19,441. The advance decline ratio is very, very interesting. 3:2. 300 stocks in the green as far as Nifty 500 is concerned. And overall, the market has started on the front foot despite main indices trading lower. So the advanced decline on the NSE is about 1400 stocks in the green and 621 in the red. Let's look at within the NSE 500 stocks that have hit all-time high in morning trade. Earnings boy Chalet Hotels 5% higher. AIA Engineering, this is a cement plant maker. Capital Goods 3917. Cummins India 2188. Power Grid 247. Birla Soft 809. So these are the stocks that are hitting record highs, and of course there's a very, very sharp momentum coming in PSU banking basket. Indian Bank 455.60, Canara Bank 465.70. A strong move coming in on Bank of Baroda as well. Motherson Sumi is also clicking 111.60. This was the call that Rajesh had taken. Rajesh, would you have a view on Chalet Hotels? Very strong set of earnings. Average room rent was 11,000 rupees. They've pointed out to a strong expansion, and of course demand for hotels is growing dramatically. Chalet Hotels 790.
So definitely, hotel stocks are doing good, and the kind of buying interest which we have seen across the all hotel stocks or hospitality related stocks, we believe that Chalet Hotel can also exhibit good amount of traction towards the buying side, and looking at the overall structure, stock is enjoying its all-time high trajectory. Yes, we do believe that one should hold their long position as a very sharp uptick is taking place after this opening. So I think 760 is the immediate level where one should, which is almost today's low. So that level needs to keep in eye for trading perspective. If it's hold above 760, then yes, possibly the next target we can see towards 815 to 820. So yes, one can remain on the buying side of trade with the Shell.
Okay, absolutely. And Shell, it would be unfair if we don't talk about all these defense counter and especially Masdok. Now, the company is in focus because it has signed a contract wing of the Ministry of Defense for the construction and delivery of 14 fast patrol vessels. So that's why I think the stock is in focus and it is up around 5% today as we speak. Mr. Palvia, coming to you for a quick technical check because the rally is just unstoppable. So is this space looking little overheated or would you still, participate in the rally that we are seeing at this point in time?
So, Tanya, I think defense, railway, and power, oil and gas, these all themes are, continuously moving in upward trajectory, and the kind of buying interest which we have seen in all these sector since last couple of months, that is clearly showing that, yes, we can see furthermore buying interest in this sector. Yes, especially in defense. Yes, a lot of buying interest is there. Whatever dips we are getting in these kind of stocks, buyers are ready to buy these dips. So I think Mazgaon, yes, there is again almost stock is giving breakout of its last 5-6 days consolidation range. So I think if it's a hold about 2400 level, then possibly we can see target towards 2500 to 2550 in the continuation of this up move. Even in this space, one can look to buy HAL, BDL. These all stocks are looking very promising. So I think defense is the theme where we can see further more traction on the buying side, and these stocks may enjoy further more bullish momentum in the coming weeks also.
Okay, and also talking about these railway counters, Mr. Valvia, we were discussing this before you came, and these stocks are not. These stocks are actually moving at aviation speed at this point in time. I mean, look at RBNL, look at IRFC. I mean, these stocks, the rally is just unstoppable. They have already turned multi-baggers and they are in focus ahead of the budget, interim budget as well. So, likewise, I mean, I want to understand from you that what should one do at these levels?
Yeah, definitely. So you rightly point out the all railway stocks are moving in with the aviation speed. I think they are factoring in the bullet trend which we are going to have in India soon. So I think all stocks are moving with the bullet train speed. We like IRFC very much at this moment. Overall structure is looking very attractive, and the kind of buying interest which we have seen since last couple of weeks, we believe that IRFC can continue furthermore upside. We are projecting target towards 195 to 210 on a positional basis. So one can buy and accumulate this stock in any kind of minor dips if you get in the volatility in the market. So your stop loss should be at around 145. Even one can look to buy Ircon also. That stock is also looking promising. Again, we have seen very sharp up move in last couple of trading session. Stock is now consolidating. But looking at overall structure, we believe that Ircon can also exhibit good amount of rally towards 265 to 280 on the higher side. So this stock is also looking promising. One can keep adding this stock in decline with stop loss of 210. Another stock that we like from the companies which are involved in making the coaches. So I think Titagarh Wagon is another stock that one can look to buy. Though stock is high ticket size and stock has moved up quite sharply in last couple of months, but looking at overall structure, we believe that Titagarh Wagon can also continue furthermore upside towards 1250 to 1300 kind of level in short term. So one can look to buy this stock also in decline with stop loss of 1020.
Okay, so chaliye, these are the picks that are coming in from the railway pack. And we really hope that momentum bana rahe going forward as well. But on that note, let's take a quick and short break. Lots more coming up on the other side. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.
Welcome back, ladies and gentlemen. And I think we should discuss NLC India as well. One of the top gainers from the small cap space. Coming to you for a quick technical check, Mr. Palvia, on NLC India. The stock actually has caught the attention of investors because it is currently on an upward trajectory and has bounced back from the 20-day average as well. 6% uptick there as we speak. 243 is the level. What would you do with NLC India?
Stock is now consolidating since last couple of week, almost 3-4 week consolidation is taking place in the stock. And but if we analyze the overall structure for the stock, yes, there is a possibility that we can see a breakout above 260, and once we get this breakout, then possibly this rally can extend towards 295 to 300 kind of zone on a positional basis. So very strong buying action is taking place in the stock in last couple of months. And looking at overall structure, yes, we do have a bullish view. One can hold their long position with stop loss of 225, and possibly we can see a target towards 265 is the first target, and then followed by 290.95.
Okay. One stock that I'd like to mark in terms of the outperformance that is coming despite weakness in the overall sector is Oracle Financial Services. Remember, it had come out with very, very strong earnings, and then the selling had taken over because the counter rose 30% that day. It's now up 3.5%. It's actually up 5.5%. My apologies. And very strong open interest development, 2.7% higher. Rajesh ji, your very quick view on Oracle Finance headed towards record high again.
So post earning, we have seen very strong rally in the stock, and that rally is not stoppable at this moment. Also towards the expiry of this month, I think again the stock may scale up to the new high trajectory, and maybe we can see a new high in the today's session itself. Possibly we can see a target towards 7200, 7250 on the higher side. So those who have already bought the stock at lower prices or holding the stock, they can continue their long position with the trailed stop loss of 6850, and I think we can see a target towards 7200 to 7250.
Okay, and now remember this is a low beta stock. This is a delivery trade, not a positional kind of technical view. The all-time high on Oracle Financial Services is 7,173. That was hit on 4 sessions ago, which would make it Friday. and we are now seeing a very sharp rally coming in. What else is moving? Tanya, it's again the railway stocks. I'm going to just show them on the screen. It's very difficult to take a technical call on this one because they are really overstretched. So my apologies there upfront. Rights 621, 7.4% higher. Rail 10 5.5% higher, 419. Ircon 2.2% higher, 247. IRFC 2% higher, 175. And I must compliment Mr. To actually sticking his neck out and saying that he likes IRCON and IRFC at current levels only technically. But the fact remains, as Mr. Chokalingam will confirm, that valuation comfort is absolutely missing in most railway stocks. Mr. Chokalingam, coming to you now, the market has now opened for about 15-17 minutes. Is there anything that catches your eye, catches your interest when it comes to small caps, mid caps, large caps? What are you looking at now?
Yeah. Before that, I am sorry that most new investors, young investors might find me very boring because I was a 9 out of 10 stocks. But I stick to my view after seeing meltdown so many times in the small cap. I can't compromise. Yes, I understand. On a rally like this, valuation at times or many times it fail. But one thing is very clear: to preserve what wealth you have created and to avoid wealth destruction, the same valuation funda comes back to help you. So I request all the new investors, retail investors, not to forget this. Don't go overboard on valuation. Yes, opportunities are there even in this market. One is Nesco. I am also holding, not because I am holding. I am fully convinced. And second, Geo Finance. I continue to believe that it will be a multi-bagger in the long term. Third, I would recommend ITC and also Reliance from the large cap space to be very defensive. Apart from Taj GVK and Indoco Remedies, these are the stocks I would recommend. You spoke about Oracle Finance. I also saw the results. After so many years, they have come back with a solid growth in the revenue. So those who are lucky holding the stock can continue to hold. That would be further 5-10% upside also. So these are my stocks and radar.
Okay, so Geo Finance and which is from the NBFC stable, Mr. Chokalingam feels that it's going to be a multi-bagger stock in the years to come, and of course he is comfortable with Oracle Finance. Fair point, sir. We have seen a strong tick coming into some Nifty stocks such as IndusInd Bank as also Coal India. Are you comfortable in this valuation zone, Mr. Chokalingam? IndusInd Bank and BPCL?
IndusInd Bank, yes, one can hold on. As I mentioned, though the market is punishing some of the banks, fact is that the credit growth is at a record high level in the last 7-8 years, still around 15-16% for the industry. Net NPA or the quality of asset is also at a record high, record best level in terms of net NPA falling to the lowest level in the last 10 years. And that is why a lot of banks are posting higher profit, because there is no need for making substantial provisions. The requirement for provisions have come down dramatically in the December quarter. So therefore, I continue to believe in the banking sector. So apart from HDFC Bank, one can hold on IndusInd Bank, and if there is any decline, one can buy IndusInd Bank.
Okay, absolutely. Shail, I will discuss IRIDA at this point in time, IREDA, but then I would like to discuss this whole valuation debate as well. Because a lot of my friends who are investing at this point in time, they always ask that, what is happening? I mean, with these railway and defense counters, we say that valuations are overstretched. But I remember you said that markets apni dhun mein hi chalta hai. And, there is this momentum investing that is taking place at this point in time. So I will discuss that valuation debate with both the gentlemen that we are having. But firstly, a quick technical check on IREDA, Mr. Pal.
So there is no opportunity to buy this stock as the stock is continuously hitting per circuit since last 3-4 trading session, and again today also stock is already locked for 5% upper circuit. So I think there is a huge buying interest is taking place in this stock, and stock is now at all-time high trajectory. So my belief is that until unless we don't have any normal trading activity, it's very difficult to give any view based on the technical, because every day we are seeing that stock is almost hitting its all-time its upper circuit kind of level. So I think if any normal trading activity keeps this stock, then only we can give some comment based on the technical. But yes, stock is enjoying all-time high trajectory. Buying interest is clearly there, and the theme is playing out for this sector. So I think this stock may continue furthermore upside. The kind of buying interest throughout the session which we are seeing and the buying order which are already pending on the even at the upper circuit. So that clearly shows that maybe we can see furthermore these kind of momentum in the coming days also.
Okay. And now talking about the valuations, Mr. Palvia, firstly. So when we talk about all these PSU names, these railway names, defense counters, the valuations are overstretched, of course. But, we have seen a stellar rally that is taking place at this point in time, and it is continuing only. So I want to understand from you that when is the right time actually to book profit when we talk about these names?
So generally in this kind of bull market, market always try to ignore all this valuation theory, and I think the buying traction which we are seeing, and the buying flow, and the investment flow which is coming from the retail as well as from the HNI circle, that clearly shows that they are continuously trying to chase the quality stocks, and I think this story is going to continue further. It's not a seasonal kind of theme which is playing out, because this is going to be a long term story for India. So I think PSU stocks, where we are seeing more traction on the railway and other infra related stocks, where it's an ongoing process for many years from here onwards. So I think for that purpose of perspective, they are chasing all this stock. When to book profit, it's very difficult, because overall structure is looking bullish on the technical front. So I think there is no as such signal at this moment to exit from all these stocks, because despite of volatile market, we are again seeing all these railway stock after a brief correction again showing good traction, and most of the stocks again trying to give breakout above their previous swing high which we have seen in the recent past. So I think until unless there is not a significant profit taking, or if we see any kind of cut beyond 15% in all these stock, then only we can see some bearish sign on the near term basis as well as on the short term basis. But at this moment, I think one should ride, and the strategy one can adopt at this moment, that is trailing stop loss. Whenever you see any kind of 5%, 6% kind of up move from their level, from the day on day basis, I think one should keep trailing their stop loss on higher side, and that's the only strategy to exit from all these stocks, because the rally is unstoppable, and the buying interest that clearly showing we can see another rally in the coming months also.
Shall, I think you would agree with Mr. Palvia.
Okay, that absolutely. See, Tanya, as a very, very, how should I say, afraid kind of a investor and trader, I generally stay away from such long side trades unless you have delivery and then you just sleep over it. Ireda was listed less than 2 months ago. The issue price was 32 rupees. It got listed at 54. From there it's moved to 169. So even if you bought it on listing day, it's 3x. So it's, if you are lucky to hold it, wonderful. Don't sell, and just keep on moving the stop price, stop loss at 15% below whatever the price is. You see how the exchanges are trying to regulate this by successively decreasing the circuit limit. It was 20% earlier, 10% about a week ago. Now it's at 5%. So they are also trying to tamp down on speculation, but it opens 4.3% higher. What will you do? And if you wish to exit, you wish to book profit, let the market help you, and just keep this 15% stop loss from the top of whatever is the most recent high. Given the way that markets are moving, it's unlikely that that 15% below will be hit, but that will tell you the change in sentiment, whether it is IREDA, whether it is IRFC, whether it is IRCON, RVNL. All these stocks are now into superb momentum, and none of the valuation parameters, as Mr. Chokalingam will agree, show any sign of comfort. Overstretched technical charts, overstretched valuations, but one must always salute the price. भाव भगवान है, और जो है वो आपके सामने स्क्रीन पे है, with all the adequate checks and balances mentioned up front. The power sector is buzzing in very strong trade. You have the likes of NTPC at 315 days high. You have a very strong move coming in Tata Power, 361.90, 1.4% higher. NTPC is up 2%. We've discussed BHEL 213, 1.5% higher. Smaller players like NHPC 8210, 2.2% higher, as also SGVN ticking away merrily at 116. Mr. Chokalingam, do you see valuations stretched in the power space as well? What would be your one or two picks here?
Power sector, yeah, we had a coverage on names like Coal India and Tata Power, but as I mentioned, they all played out in a very big way. Recently, we closed the calls on most attractive power stocks, so I am not in a position to, contradict, what I have already done. So I would, as I mentioned, stay away for some time.
Okay, absolutely got that. And Indian Bank is also the top gainer from the mid-cap space. The bank reported 51.8% jump in its net profit to 2,119 odd level crore rupees in the third quarter. Coming to you, Mr. Palvia, for a quick technical check on Indian Bank. And what do you think of the results?
So Tanya, I believe that PSU banks are looking one notch better compared to all private banks at this moment, because we've seen significant profit taking in most of the private bank post earnings, and looking at the behavior of PSU bank, that is looking quite stable in this volatile market. Be it Canara Bank, be it Bank of Baroda, Indian Bank, and PNB, all these banks are looking attractive at this moment. Even Bank of India. So I think PSU banks are looking promising, despite we have seen significant profit taking in the bank Nifty itself. But PSU banks may exhibit furthermore traction on the buying side. Indian Bank is looking promising now. Stock is penetrating to its multiple supply zone, which is at around 468 to 470 zone. Once stock crosses above 470, yes, there would be a breakout trade, and then possibly we can see a target towards 500 to 520 on a positional basis. So I think stable structure for Indian Bank. Those who have already bought or willing to buy at this moment, they can buy and accumulate this stock with stop loss of 450. From this pack, I think one can look at PNB also from the derivative pack. PNB is also showing very stable set of chart structure, and towards this expiry, I think stock is now approaching to its series high level. So we believe that this stock can also continue furthermore upside in the coming series, and possibly we can see target towards 115 to 120 for PNB. So one can look to buy PNB also in this market with stop loss of 96.
Okay, absolutely got that. And you talked about GAIL, you mentioned BHEL as well. And I want to get your technical check on Steel Authority of India, that is SAIL, because the stock is up 2% as we speak. 117 is the level, hovering around its 52-week high. What do the technical charts suggest for Steel Authority of India?
So yes, BHEL, SAIL, GAIL, all three stocks are looking promising at this moment, and the kind of buying interest which we are seeing since last couple of weeks for this sale now, stock is comfortably holding above 105, 108 level. So I think till the stock is holding above 108 level, I think one should look to buy the stock if you get any volatility in the stock prices. 108 should be your positional stop loss. And I think looking at the overall structure, we believe that once a stock crosses above 120 mark, then possibly this stock can also join the party of all PSU stocks, and possibly we can see target towards 135 to 140. So this is the one stock where still underperformance compared to all PSU stocks. And we believe that the kind of formation which is taking place on the weekly as well as on the monthly chart, sooner or later sale is also going to join the party of PSU basket. And I think that 135, 140 target could be there on a positional basis.
Okay. Tanya, a lot of rhyming things happening. क्या भेल गेल or sale, you
Yes,
remember?
yes,
No,
sir.
you won't know actually. In the freedom struggle, there were three players: Bal Gangadhar Tilak, Lala Lajpat Rai, and Bipin Chandra Pal. So they were referred as Bal, Pal, or Lal in newspapers. Therefore, we will now make another patent and give it to Mr. Palvia. Bhel, Gale, or Sale. Kya baat. And of course, the one that you have remains with you. Chota packet, bada dhamaka. So
Yes.
that's how it is, ladies and gentlemen. Fairly strong moves coming into the power space, and all small caps are rising. NTPC now 316.85. This is not a small cap, but this is the price point that I'm trying to make as far as prices are concerned. Tire stocks are doing immensely well. Let's look at Balkrishna Industries. The earnings were a blowout when it came in the morning. What is Balkrishna doing? Okay, flat. 1% lower, 2.5% rise in open interest. But stocks like JK Tire now into a different orbit. 503 rupees. Very strong move coming in. Mr. Chokalingam, coming to you first. Is there any valuation comfort that you have in any of the tire stocks that we'd like to discuss?
Maybe those who are lucky to hold a stock like Apollo, Balkrishna, they may continue to hold. There is a possibility of another 5-10% upside. As I mentioned, automobile sales growth is so robust, and oil price is down. Therefore, synthetic rubber prices are very weak. But otherwise, other stocks one should start booking profit.
Mr. Palvia, any view on JK Tire?
So very strong buying interest in the stock, and I think the stocks from tire space, these two stocks like Apollo Tire, JK Tire, these two stocks are showing very good amount of buying interest in last couple of month. And looking at the overall structure for JK Tire, we believe that if stocks continues to hold above 485 level on the downside, then possibly this buying momentum is likely to continue further, and we can see a target towards 540, 550 also in the continuation of this uptrend. Again, in the Apollo Tire also, we are seeing very good traction. This is the fourth consecutive series for Apollo Tire that we are seeing higher high low formation, and each series has displayed a long built up kind of session data setup. So I think Apollo Tire is also looking promising at this moment. There is no unwinding activity till now, and I think looking at the overall data structure, we believe that yes, Apollo Tire can also continue furthermore upside. Maybe we can see some brief consolidation for some time, but again, overall structure is looking bullish, and Apollo Tire can also show upward momentum towards 560 to 580 kind of zone also.
Okay, absolutely got that. And NHPC, we should pull up that stock as well. One of the top gainers from the mid cap space. And if we see the YTD performance, Mr. Palvia, the stock is up 26% on a year to date basis. 83, that's the level where we are at, one of the top gainers. What would you do with NHPC at these levels?
So I think this stock is also shown a very strong rally, and the kind of momentum which we are seeing on across all time frame, that it clearly shows that yes, this stock can also show a three-digit kind of price in coming weeks. So I think one should remain invested in this stock, and your trailing stop loss at this moment should be at around 75. Till the stock not breaks below 75 on a weekly closing basis, I think one should not be worried in the stock prices, and possibly we can see a target towards 100, 105 also.
Okay, absolutely got that. And Mr. Chokalingam, coming to you, I know you like Indico and TAR GVK, but what are your thoughts on NHPC?
Yeah, as I said, I have seen the PSU rally for last 35 years. Let me tell you, in 90s, PSU stocks crashed even 90%. Okay, that's old. Look at 1819, same Cochin shipyard crashed even 50%. All the PSU stock crashed, and even the banks. Maharashtra Bank was available at 17 rupees just 1 or 2 years back. The same Indian Bank was available at 60. The point I am trying to tell you is that don't get carried away by the rise. It's a great threat. If you ignore the liquidity available in the system, there is a limit to the liquidity available. Today, small cap as a pack, about 4,000 crore trading at nearly 40 lakh crore. Even 10% of that come up for selling due to some fear. Let me tell you again and again with a lot of confidence, you can't find liquidity even for a period of 2 months. So therefore, do not ignore valuation. This is the best time to slowly start booking your profit and transfer money to your wife FD account or children wife FD account, or repay your loans and buy some houses. So this is the best opportunity. This is the mother of all bull market I have seen for small cap PSUs and defense. I may be wrong. Rally may continue for 2 weeks, 2 months, or 2 quarters. But I know one thing for sure: it will never continue forever. Whenever correction happens, it will be very steep, and it will be very difficult to digest the wealth destruction. So that's my suggestion.
Right. A very, very sound, practical advice coming in from a gentleman who's seen 3 decades worth of ups and downs, 7, 8 bull runs and bear traps, Mr. Chokalingam. That this looks really overstretched, especially in the PSU side, and a very serious word of caution coming in. Thank you, Mr. Chokalingam, for such a wonderful advice which comes against the face of market action on the long side, and I'm sure it will reverberate across stock prices. Okay, now we are 4 minutes away from 10 a.m. Let's now look at what the index is doing. Okay, it's the FNO expiry for the January month, and tomorrow is a holiday. So a truncated week will start from Monday onwards. Nifty is down 83 points, 21,370 for you. Nifty Bank is down 0.5%. 222 points lower, 44,850. There is pain across IT, 1% lower, 36,750, and most indices are in the red. What is ticking is the PSU basket, and again, with all the due caution that we can muster at our end, we request you to look at them with a very, very serious jaundiced view. I am just going to read out the prices. Shipping Corporation of India up 10%, 209. IFCI up 10%, 5280. From the railway space, RITES at 623.50 is up 8%. You have a strong move coming in on IRCON, 3.7% higher, 250. You have a strong move coming in on NBCC, 5% higher, 110, and of course Chennai Petro, 5% higher, 797. Ladies and gentlemen, with whatever caution I can muster, I must say that a lot of charts are looking overstretched, but भाव भगवान है और आपके सामने है. BHEL 214.45, a very strong move coming in here. We'll give it to Rajesh Palvia on Bale, Gale and Sale. Tanya, what are you looking?
Absolutely, Shell. I think bang on for that, Mr. Palvia. But Mr. Palvia, would you agree with Mr. Chokalingham's view? It is now actually the time to be cautious when it comes to, you know, these PSU stocks, railway counters, defense stocks as well.
So definitely valuations, yes, will work on a longer term basis, but on a shorter term basis, yes, liquidity and left out feeling, those who have not taken the exposure in all these stocks, because this theme is going to continue for long term. The kind of energy which our Prime Minister has already given on the PSU theme, that clearly giving the confidence to not selling all this PSU stock despite of having a huge profit in the books. Everybody is riding the rally at this moment also. So I think until unless there is no major negative comes on the PSU theme or anything which can shake the confidence of a trader or investor, till the time I think this momentum is going to continue, because we have variety of PSU stocks. It's not concentrated to one sector. So it's spreaded across all theme which is going to have a long-term growth trajectory for India. So I think there is a variety of stocks are available, be it power, be it infra related, be it oil marketing companies, and lot many other sector, defense. So I think everybody is having different view for different sector for long term perspective. So that is clearly playing out at this moment, and they are adding all these stocks in their portfolio whenever they get any kind of opportunity in the market in volatility. So yes, one needs to be cautious if you are low risk taker at this moment. So I think yes, charts are overstretched, but this is the bull market, so we don't know where this rally is going to stop. And I think that the formula which we generally follow, 15% of previous swing high should be your stop loss if you want to get exit, if you are riding your profits. So that is the one formula one can adopt, but this is not a foolproof formula. But this is one suggestion I can give to exit if you are really feeling that the rally is overstretched and valuations are already very far from the prices. So that's the only way to exit from all these stocks.
Okay, I think you said it, Mr. Palvia. And on that wonderful note, thank you so much. I think the trick is to pick quality stocks and stay invested, and of course, be cautious as well. So on that wonderful note, thank you so much, Mr. Palvia, and thank you, Shell, for sharing valuable insights with us and being with us here on BTT. So with that, ladies and gentlemen, it's now time for us to wrap up this edition of Market Today, but lots more coming up for you only on BTTV. Stay tuned, and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome. You're watching Business Today.